Hey guys, welcome back to section one of my Trending Traders trading course. We are talking about market structure, and today I want to talk a little bit more about. Um, I want you guys to look at the market less as overall candles moving up and down, kind of like this, right? And I want you to start looking more at the market in terms of blocks of supply and demand being formed, right? This is a really interesting way to look at the market because it gives you an idea of exactly where the market wants to go using the blocks of demand. So, what is demand? Well, let's actually, this is the daily chart. So, we are not going to be on the daily chart. We're going to go on the 4 hour chart just to keep it coesthetic with what we've been doing. And we are, as you can recall from my previous videos, supply and demand is formed when, little drink of my coffee, when structure is broken either to the top side or the bottom side of a range, right? So that's how I want you guys to start thinking about price. I want you to look at the market more as blocks that need to be broken, right? And we can assume that any type of reaccumulation or sideways price action is the creation of one of our blocks, right? And we're going to base the direction of which way we're going to trade based off of what the previous move was, right? So if we take a look here, I'm going to use this leg right here. Okay, this is going to be our example. What we have is we have one of our areas, we have a block, right? We have our high to our, this will be our low here, right? So in a way, this is a support, this is resistance, and this is support, right? We have price break through this low, validating this high to low area, our block, as a bearish block, right? Because look, we have validated to the downside by breaking through this support area. Now, if we go a little bit further and we take a look, well, as we went over last class, we have internal external liquidity, right? So this is our external swing high and this is our external swing low. Now everything in between is going to be internal, or excuse me, not liquidity, but internal external market structure. So our swing high, our swing low, everything in between is now internal market structure, right? But again, we're looking at price as blocks, right? So we see here we have an internal supply zone left, right? So price has come down. We have broken through this overall area of support and resistance, and we have created a supply zone here where price again breaks through to the downside, and we see that repeat again. We have another block here, right? And price again breaks through to the downside, validating this area of supply. Again, we have price building up, right? Break through, come up, break through, come back up, break through here, and then price comes back up. Now, we remember that market structure is fractal, right? So this area with a larger pullback is the exact same as these smaller pullbacks because it's creating another block. So as we see price come back up and it starts to fill these areas of supply with price, we see price start to move to the downside. So we know that price most likely wants to validate this new block, right? We have another block here, which we get a rejection, come back, and price pushes through, validating this larger than these areas of supply, right? But we're always thinking bearish in this scenario because nothing is showing us bullishness, right? Now, there's an argument to be made that, let's get rid of some of these drawings, that in this area, we get a shift. We get a bullish shift, right? We have another block validation here, right? A breakthrough. Now, is it okay to look at this shift and think about going long here? Absolutely, it is okay to do that, right? And it's actually makes a lot of sense to look at that as price potentially is going long because of our overall institutional order flow, right? But what price does is price breaks down, validates another bearish block, right? So let's say you go for a long here, price fails, that's a -1 for you. Price comes back down to this area of demand, comes back up. Now, you are totally valid to look for sells here, right? Because we had a failure and price did not go bullish. Again, price broke down into this demand zone, broke below this demand zone. At this point, we start thinking to ourselves, okay, price is most likely wanting to continue bearish. So we look for sells in this area. Price comes back up, right? We still haven't broken through this overall, but we have another, just going to clean this up a bit. We have another block forming here. So we can start looking for positions to the downside anywhere in this area. Now, this is, we're on the 4-hour chart. So of course these, my stop loss is never going to be 2,000 ticks. But it doesn't matter what time frame we're on because it's the exact same on all time frames, right? So just let's not focus on the time frame that we're currently actually trading on, because you will find this exact same formula, this exact same model happening over and over again on your entry time frame. That's how the market works. It's all supply and demand being formed and validated. Right. So we use this theory, right, knowing that we have a block that actually, we have a small block here that broke bearish. We have another one here, broke bearish again. Now this is internal market structure happening on a smaller scale because the market is fractal. Comes back up into this supply zone and goes to break the resistance that we see here, right? So this is a perfect opportunity to look for a short. Now, we have to remember institutional order flow, the composite operator, big money is still trading bullish. So here we are going to find the down move, up move, right? Up move, and a down move, okay? So this, from the low to this high, once this price breaks through this top side, right, it becomes bullish. Now, if price were to continue to the downside, right, let's say price went like this, then this would be a bearish block. And we can continue to follow price this way. But notice that just this exact same as we had up here, right? We had price failure back to the bearish, back into a bearish direction. Well, here we have price failure in a bullish direction, leaving behind a new demand block. Price then creates another pullback, right? Here to here. We have our level of resistance, and our expectation is now, because we have this big bullish, a lot of bullish momentum to the top side with this move here, that price most likely wants to create a new block which gets validated in this area here, right? Once it's validated, we now have two bullish demand blocks, right? We have another one form here, which we assume, actually it's more like this, which we assume will be validated. So you are totally valid to look for a long position somewhere in here, because we have our directional up move, a correction, and another up move. This is where we look for positions, right? And that's exactly what we see all the way up. We have a validation of price. Price moves up. We have a high. We have a breakdown, right? Goes bearish. We have a low. Breaks back bullish. Bullish. This move breaks through. We assume that we are still looking for bullish price action, and that, of course, matches the institutional order flow, right? Because all these blocks that we're looking at on a fractal level is the exact same as this entire move here, right? We are now under the understanding that price, just like it's been doing throughout here, right? We're following the trend of the market using our understanding of demand zones wanting to be broken in a continuous direction, right? While also understanding that market is fractal. So this is just a smaller pullback within a larger time frame, right? Which this becomes quite a bit of trading days, because obviously we're on a higher time frame. But our expectation, once this starts moving to the top side, is that, well, this is our target. We want to break this high. And that's exactly what ends up happening, right? So what we need to do is we need to start looking at price less in terms of candles moving up and down, but more in terms of sideways price creating blocks that give us an idea of direction, right? Because we have, let's just do this. We have another block here, gets validated when this pushes through, right? Price comes back in. We are under the understanding that price most likely does not want to break this low because we are continuing on a bullish block cycle, right? So we can look for a position in here, or we can let this next block form, right? Wait for price to come up. We can take a position. Maybe it's a loss. Come back down. Price starts moving back up with internal blocks being created because each candle on a micro scale is the exact same as these larger blocks going bullish. So that is my lesson on demand blocks and how we are going to look at the market in terms of the market being fractal, higher time frame confluence, bullish and bearish order flow, demand, supply and demand blocks being left behind, the market not so much being just candles moving up and down, but we are adding some type of structure to the positions or to the framework of the candles using our understanding of direction that our blocks have created for us. Yeah, hopefully that makes sense. This is a little bit confusing at first, but as you get more used to it and as you study these concepts, you will have a better understanding of market fractality and exactly what to look for in terms of a trending based environment and how we can figure out areas of interest for our position executions. I will see you guys on the next one.